As you've just heard, we're gathering a lot of momentum. We have a strong, capable senior management team that's intensely focused on building a solid foundation for us to achieve our goal of membership in the S&P 500. Our balance sheet is clean, cash with no debt. Our revenues are unimpeded by royalties, metal streams, or hedging, and our diversified portfolio of assets is a good source of internally generated projects, growing both resources and production. Yes, our goal is ambitious. We need to grow to a market cap of $5 billion to get into the S&P 500. However, I'm a big believer that fortune favors the bold. And I believe that when we enter the S&P 500, we will gain an enormous competitive advantage, and we will have a significantly higher share price. You might ask why. There are three important factors that I believe are going to influence this. One, future share prices are going to be driven increasingly by whether a share is in an index or not. The capital markets are closing. 80% of America's capitalization, public market capitalization, is represented by the 500 companies. Actually, it's 505 companies in the S&P 500. 80%. And currently, there's over $2.2 trillion invested by index funds directly into the S&P 500 stocks. So when you look, and these factors are going to play a really big role, in my mind, in the coming gold market and the performance of precious metal shares. We've already, and I think they're going to attract the lion's share of the investment capital, those companies in the indices. We've recently seen the adverse effect of rebalancing, or it hasn't even happened, but it's going to happen in June, of the index, the GDXJ, which is a small cap producers and explorers in our sector. And the S&P, or the Van Eck, who runs the GDXJ, said they're rebalancing it because the money's coming in. They can't get large enough positions in the juniors. So they came along and said, well, we're going to put in about 12 majors, or intermediates to majors, and we're going to take out about 24 juniors. We're going to reduce our weighting in those juniors. And it's had a devastating effect on the share price. We were included in that. They were saying they're going to sell 14 million shares of our stock. But that, fortunately for us, that only represented 3 days trading. There were some of the juniors that they were reducing positions that were equivalent to 20 to 24 days of average trading. And it's just hit it very hard. So, yeah, I don't know what I just did here, but I just, go away. So what's happening is you're going to have a change in the marketplace. And that it's going to take a couple of years for us to get there. But to get to the S&P, we have to do 4 things. We have to raise capital within the next 12 months to fund our current development projects. We have to go beyond our existing asset base and pick up additional production and resources. We have to build our projects on time, on budget, and deliver the promise in terms of cost of production and amount of production. And fourth, we have to respect the value of your capital and deliver you a higher share price. So what does it mean to your investment? All too frequently, M&A and financings result in a company having a bigger market capitalization, management gets a bigger salary and bigger bonuses, but unfortunately, for the share owners, often the price is stagnant. And we saw that with a number of the big companies. Is this going to happen to us? Not as long as I'm an owner of the company. We have a number of strong safeguards that I believe will mitigate against this potential risk. Our first line of defense is our large insider ownership. It imposes a discipline on the board and management to avoid excessive dilution. And excessive dilution is always a risk when pursuing a strategy of growth. As a measure of my belief in McEwen Mining and its future, I've made a large investment in the company, a financial commitment that is huge when compared to the financial commitments of CEOs in the industry. 99% of the industry CEOs would have a smaller investment than I in their company. My investment in McEwen Mining is $127 million. This level of investment represents very strong alignment with your investment. However, we all know that just because there's a large insider ownership, it can be a safeguard, but it's not a guarantee. Our second line of defense is our CEO's compensation. That's me. I get a salary. The board just increased it last year, but I get a salary of $1 a year. They're very generous. They were quite concerned about the magnitude of the increase from $0 to $1, but it was almost infinite. And by choice, I don't receive a bonus or stock options. I will only make money in McEwen Mining shares the same way that you will make money. We both need a higher share price. The third line of defense is our senior management team, who you've met today. Its individual members bring many, many years of experience, achievement to us in building and operating profitable mines. The fourth line of defense comes from experience investing in the industry and building companies. Mining, to me, is an extraordinary business because it presents the opportunity to hit home runs, clear out of the park. However, as you know, hitting a homer is not easy. I found that I could significantly improve my chances of hitting a home run if I bought distressed assets ignored by the market, if I bought ones that when no one else was buying, and if I bought when I saw what others were missing. My strategy has been to focus on assembling complementary assets, improving the productivity and production costs with the addition of technology, increasing exploration in known gold districts, and adding capital where it had been previously denied. And I'd just like to talk about my two biggest hits, because I think it's relevant when looking at building a company and talking about experience about building. First, Corp Inc. Was a company that I built and ran for 19 years. And this is a picture of its share performance relative to some of the biggest companies in the gold industry between 1993 and 2006. And Goldcorp's line is the top line that's going right off the chart. They have a compound annual growth rate in excess of 30% per year for more than 13 years. We outperformed Barrick and Newmont and a whole host of others. They were left in the dust. And that's what I want to do with McEwen Mining. Sorry. Now, not only did we outperform the entire gold market, we outperformed most of the biggest companies in the world. We outperformed Microsoft during that period. We outperformed Berkshire Hathaway during that period. We outperformed the Dow and the S&P 500. That is what's possible in this industry. The other story is Rubicon Minerals. And in 2007, I made its management came to me and asked me to make an investment in their company. They had a property near our Gold Corp Red Lake mine. And at one point, I tried to buy that property while I was at Gold Corp, but the seller wanted too much, and this company called Rubicon bought it. And after I left Gold Corp, they came and said, well, we'd like you to become an investor. And I said with some of my associates, well, okay, you have an interesting story, but why don't you come back in a day? And we provided them with a strategic plan and said, we'll make a private placement of $15 million, where I did $10 million and other investors put up $5 million. And I also vended a large 500,000 acre land package that I had staked around a new high-grade mine in Alaska for additional Rubicon shares, and then arranged for another company, which was the predecessor of Lexum VG, to vend in a land package in Nevada for Rubicon shares. So this is Rubicon's performance. And back there in 2007, made the investment. We did, and in 2010, I sold it. And I sold it because I was looking at it, and I looked at the share price one day, and I said, wow, I'm up 16 times on my money. And I thought, I didn't have to think about this very long, but I remembered what my grandfather used to say about the stock market, and he said, you don't go broke taking a profit. And so I sold it. I sold it at a big discount to the market. The stock, within the next 2 to 3 months, increased to over $6 a share. And then for a year and a half, stayed above the price I sold it. And unfortunately, it went off the page in 2015. But that's just looking at some of these areas. So just allow me, I lost my place here. So this industry is one where you can make a lot of money for your share owners and yourself, but you have to protect the shareholders' interests. And doing that is our fifth line of defense, and that's our board of directors, who have seen both the good and the bad in our industry and others, and their valuable collective wisdom and judgment and investment shapes our evolution. We're well equipped and accelerating our drive to achieve our goal of a market cap beyond $5 billion, a significantly higher share price and membership in the S&P 500. We have good properties and good locations, as Sylvain said, and just as in real estate, it's always location, location, location that drives value. In Nevada, our land package is located in the prolific mineral trend just below Barrick's largest gold mine, largest recent discovery. We're expecting to receive our permits, as you heard, later this year and start construction. In Argentina, our joint venture with San Jose, that mine is one of the highest grade silver gold mines in all of the Americas. And our large land package encircles one of Gold Corp's largest mines, lowest cost mines in their system. In Canada, our newly acquired Timmins properties are located in the middle of one of the biggest gold camps in the world, and our properties have excellent high-grade exploration targets and near-term production prospects. In Mexico, we're turning from an oxide ore search to a sulfide ore search, and we think we've just scratched the surface there, and El Gallo Silver will have numbers out later this year and hopefully a production decision. The estimated CapEx, and that's an important thing, how much money you have to spend to develop a project. The CapEx for Gold Bar and El Gallo Silver is relatively low, and the paybacks will be short payback periods with healthy rates of return at current gold and silver prices. Now, I believe the property that could have the biggest potential, Donald was talking about to you today. And that's our Los Azules copper project. I had a great surprise today because I saw this picture and he said, "This is Los Azules." I went, "Really?" It's already built? But that's the size of the plant that we're looking at. This project gives us massive leverage to the price of copper. In terms of the size of the deposit, you heard it would rank right up there with some of the biggest. And if you allow me considerable license, I would like to do some alchemy. And by that I mean I would like to convert all of the resources that we have at Los Azules into gold equivalent ounces to give you a sense of just the size of this deposit on a relative basis. So if you took our copper deposit and took all the resources, you're not supposed to do this, but if you took all your resources, put them together, and divided by the copper price and said, okay, how many equivalent gold ounces would that be? We'd be looking at a gold deposit of greater than 40 million ounces of gold, with a grade just slightly under a gram. This exercise is solely driven to give you a sense of the magnitude of this deposit and its long life nature. In summary, I'd like to characterize MUX. We have large insider ownership, a clean balance sheet, unencumbered revenue, property with great addresses, low capex, skilled management with big ambition, and a strong record of achievement, innovation, and shareholder friendly. I'd like to spend just a few minutes on gold, silver, and copper. I think we're approaching a time, it's a little overdue, but where we're going to see the US dollar weaken and the price of gold, silver, and copper going up. There was this huge enthusiasm for President Trump or his policies, and the market's been flying based on that. And we're seeing each day, as each day goes by, there are hurdles being thrown in front of him to, say, reduce the taxes or change the medical system or do any of the other policies he's looking to do that excited the market to such a fever pitch. And that drove a huge amount of money into America, a huge amount of money into the US dollar, and all the commodities went over. We're starting to see charts, though, with long moving averages, 200-day moving averages, suggesting that this may be approaching an end and that the dollar is going to fall against the euro, against the yen, and against commodities. So on this chart, I hope you can see it, it's what we have. The gold line is a ratio where you take the US dollar index, and the US dollar index is basically comparing the US dollar to 6 other currencies that are shown up there, coming up with a number, and dividing it by the price of gold to come up with a US dollar index gold ratio. And it's running, here you can see it's running from 2011, or I hope you can see, over here on the left, to present. And so down here at the bottom was when the gold market peaked. That was the end of 2011. And since then, the dollar has gone up and the gold price has gone down. I mean, if we just made an inverse copy of this and turned it upside down, that would be the path that gold followed. So up here, it came up, the gold dropped. This is back in here, which was in the 2016, the beginning of 16, and we had a nice run coming in the gold stocks as this ratio was dropping. Then we lost it again from last summer to about early this year, and it ran up, and then it came back down. And right now, the 200-day moving average, it's an exponential moving average, it has crossed this line, and it looks like the dollar is starting to descend. And that's against gold. You see a similar pattern appearing is the same timeline across here, but appearing with silver. And this is just looking at the silver-gold exchange ratio. So back in 2011, over here on the left-hand side, the exchange rate, you needed 31 ounces of silver to buy an ounce of gold. At this point, at the top, you needed 83 ounces of silver to buy an ounce of gold. Just to give you a ludicrous example, but if that ratio changed and returned to 31 ounces of silver buying an ounce of gold, say today or tomorrow, the silver price would be $40 an ounce. So what is happening here is this ratio is changing, and it looks like it's peaked and it's starting to descend. And what we've seen is that when the silver ratio, the silver exchange ratio, is improving in favor of silver, the precious metal market is starting to move up. So, and this is just looking again at, oops. And there's copper in here as well. It's doing the same thing. So I think it's, although it's feeling like it's not going to go up in the near term, these numbers are suggesting it is. And I take that as a very encouraging sign.